we will do a new module. This is Incidence of Tax Part 2. In this module, I am going to work on two problems. I have given the PPT in the description box with the rules. So it will be easy for you to understand and practice. The more you practice, you will be more comfortable in doing the problem. So we will go to the first problem. Profit on sale of plant at London, 1/2 is received in India, rupees 1,46,000. This is about a foreign national, Mr. S. So here you have to remember, title is important. So what you will write as title? Table showing the computation of taxable income of Mr. S for the assessment year 25-26. It's very important, every table should have a title. Then this particulars column will be there. Particulars column you will write the points. Then resident, not ordinarily resident and non-resident. So particulars, you have to write the points. So first point is profit on sale of plant at London, 1/2 is received in India, rupees 1,46,000. So here you have to remember, income is received in two countries, one in UK, one in India. 1,46,000, we have to divide 50%. 73,000 received in India will be taxable in all cases. Rule 1, 73,000. 73,000. What is received in UK, you have to remember, it's not business income. So rule 5 is applicable. Taxable only for the resident, 73,000. Not taxable for other two cases. Now the second point is profit on sale of plant at Delhi. 1/2 is received in UK and total amount is 1,02,000. So here you have to remember, second point, here also it's received in two countries, one in India, second point, one in India, one in UK. One in UK. So here you have to remember, 51,000 received in India, taxable in all cases. 51,000, 51,000 and 51,000. Now what about received in India? UK. This is in Indian income, sale of plant in India. Taxable in all cases. Rule 2 will be applicable. 51,000, 51,000 and 51,000. Now the third point you have to see. Third point is salary from an Indian company received in London, 1/2 is paid for services rendered in India. Total value is 60,000. So how will you do this? Third point, salary received. This also you have to divide it into two. 60,000, whatever received in India, received in UK. 30,000 will be taxable in all cases. Now, other 30,000 received in UK. Rule 5 will be applicable because it's not business income. So, only for the resident it will be taxable. Other two cases it will not be taxable. Now, fourth point, interest on UK development securities, entire amount received in UK, amount is 40,000. So, here you have to remember, UK development securities. It's rule 5 because it's not business income. Fourth point, 40,000 will be taxable only for the resident, not ordinarily resident and non-resident, it will not be taxable. Fifth point, income from property in London received there 30,000. So here fifth point you have to remember, it is also rule 5 because it's not business income. So fifth, 30,000 taxable only for the resident, rule 5, it's not business income. Now, sixth point, profit from a business in Delhi, managed from India, 49,000. So, you know the rule, it's an Indian income, it will be taxable in all cases. Sixth, rule 1, value is 49,000, taxable in all cases. Business income from India, taxable in all cases. Now, seventh point, income from agriculture in London received there, 1/2 of which is used for meeting hostel expenses of his son in England and the remaining amount is later sent to India, rupees 25,000. Here we have mentioned the application of income. Whatever income we received, it is taxable. Income tax department is not bothered about how we spend the amount. he can spend for anything. That will not be considered. Your income will be taxable. So here you have to remember, entire 25,000 will be taxable. So here it's rule 5. Rule 5, 25,000 will be taxable for resident. Since it's rule 5, only for taxable only for the resident, not ordinarily resident and non-resident, it will not be taxable. Application of income, we are not bothered about. We have to pay income tax for the amount we receive. Now, gross dividend received in London on May 6, 2024 from a company registered in India but mainly operating in India, 17,000. So here you have to remember the rule. In 17,000, it's an Indian income. So it will be taxable in all cases. 17,000, 17,000 and 17,000. 17,000 will be taxable in all cases. Dividend from an Indian company. Earlier I told you it was not taxable, but this is rule 1, it is taxable. Now, income from property in Nepal. So, property in Nepal, house property income. It's not business income. Rule 5 will be applicable. It will be taxable only for the resident. It will not be taxable in other cases. Gift from a relative. You have to remember that gift from a relative in foreign currency, 1/3 of which is received in India and remaining amount is used for meeting educational expenses of his son in USA, rupees 3,70,000. Gift you have to remember, we will learn in detail in income from other sources. Gift from a relative is exempted, so it will not be taxable. Other cases, from one person or more than one person, if you are receiving gift exceeding 50,000, it will be taxable. Now, we are asked to calculate the total income. So, taxable income you have to remember, you have to take the total. Here it is 12-mark question, meaning all points 1 mark each we will give. For the total we will give 2 marks. So 4,81,000, 4,81,000, 2,71,000, 2,71,000 and 2,71,000. So total also is important. You have to remember that. Now one more problem we will do. Here also it's mentioned as a foreign national. Whether it's a foreign national or Indian national, it will not be considered for computing the incidence. But whereas for residential status it's considered because of the 60 days relaxation. Now first point is income from property in New York received there, 1,20,000. So here you have to remember income from property in New York received there. It's rule 5. It's not business income. So the first point is it will be taxable only for the resident, 1,20,000. Not taxable for other 2 cases. Second is income from, second point, income from business in Kolkata managed from Singapore, 2,40,000. You have to remember that it is Indian income. 2,40,000 taxable in all cases. Managed from Kolkata meaning head office is in Kolkata. You have to be pay tax for that, irrespective of the residential status. Now third point, profit on sale of machinery in California, 1/2 is received in Kolkata, 90,000. So the third point we have to divide it into 2. One is received in USA, one is received in India. So here, third point, 45,000. Whatever is received in India will be taxable in all cases. 45,000, 45,000 and 45,000. Now whatever is received in USA, rule 5 will be applicable since it's not business income. 45,000 will be taxable only for the resident, not taxable for other 2 cases. Now fourth point, gross dividend received in Thailand from a company registered in India but mainly operating in Thailand, 15,000. So you know the case here, Though it's operating in Thailand, it's registered in India, it is taxable in all cases. 15,000, 15,000 and 15,000. 15,000. Now fifth point, income from a house property in Dhaka deposited by a tenant there in foreign branch of SBI 36,000. So here you have to remember it is rule 5. It's not business income. Income from house property. Income received in Bangladesh. Taxable only for the resident. 36,000. 36,000 not taxable in other two cases. Now sixth point. Gift in foreign currency rupees 3,50,000 from a relative. One half is received in India and the balance spent in New York. So you know the rule, gift from relative is exempted. Gift from relative is exempted. Now seventh, income from agriculture in Burma, rupees 45,000 received there and 1/3 is spent while visiting there and 2/3 later remitted to Kolkata. We are not bothered about how you spend the amount. 45,000 you received, you have to pay tax for that. So here it is rule 5, it is not business income, so it is taxable only for the resident, not taxable in other two cases. Now rule 8, point 8, income from a profession from a management consultant in Singapore received there. The profession was set up in India and the amount received is 2,20,000. So here you have to remember income from a profession or consultant received in Philippines. It's rule 3, business or profession set up in India. So rule 3, 2,20,000 will be taxable for resident and not ordinarily resident. Non-resident, it will not be taxable. Now we have to take the total value and then you can complete the problem. So this is how 7,66,000, 7,66,000, 5,20,000, 5,20,000 and 3 lakhs. This is how we calculate the. So this has to be, if it's a 10-mark question, each point will get 1 mark and total will get 2 marks. So total is important and most of the students will make the mistake. When they get a question, some students will write the 6 rules, whether it is taxable or not. It's a wrong concept. When you are getting the question, you are supposed to work out the question and compute the taxable income. And when you are writing, title is important. So this is what I wanted to explain in this module. Happy learning. Thank you.